delighted to have Jimmy Muchechetere here for this Edison TV interview focusing on the global outlook on healthcare stocks. Jimmy is an equity research analyst at Investec, specializing in healthcare. So firstly, Jimmy, thank you so much for your time. To start off with, it'd be great if you could just discuss the long-term outlook for global healthcare stocks.
Well, thank you very much for having me. At Investec Wealth Investment, we are bullish on the long-term sector, health of the healthcare sector. And there are many reasons, but the two most important ones are innovation and COVID-19. Now, on innovation, we see plenty of activity on the innovation front on multiple areas. We see it on the diagnostic side. We see it on the therapeutic side. Examples would be cell therapy, gene therapy, radioligand therapy. We also see it on the vaccine side, what we've seen with the mRNA vaccines. But we also see it on the technology side, robotic surgery, artificial intelligence, as well as telemedicine. COVID-19 has accelerated many of these trends. In addition to telemedicine, mRNA vaccines have come to the fore. These are the ones used by Moderna and Pfizer. And mRNA really is a platform technology which is now already being adapted for other vaccines and other diseases. But more importantly is that COVID-19 has shone a positive spotlight on the sector. And this has lent itself to attracting both talent and capital.
Great. And just following on from that, are there any healthcare subsectors that you're particularly excited about currently?
Well, at Investec Wealth Investment, we invest across the whole value chain. And this is from diagnostics to therapeutics to medical devices as well as technology. And we see opportunity in each of those areas. Take three examples. The first one would be cell therapy. Cell therapy is where you take the cancer cells from a patient. In the lab, you engineer some killer T cells to that particular cancer, very personalized medicine. Once you make sure that those killer T cells will work against a particular cancer, you re-inject it. The infusion process takes less than 10 minutes. And depending on the cancer, there are remission rates of 30 to 40% in many of these cancers, which previously were a death sentence. If we look at robotic surgery, this is used primarily for routine surgeries, surgeries such as hysterectomies, prostate surgery removal, gastric removal, and bypasses. And we've seen a big backlog happening because of COVID-19 related lockdown. So to deal with that backlog, we will need more efficient processes, and robotic surgery lends itself because it increases efficiency, it increases consistency of outcomes, and thereby making patient experience much better. And then the last example I'd give is telemedicine, which has been accelerated by COVID-19, where many people were effectively forced to try and access healthcare services remotely. And many people ended up having to try this. And in many cases, it's worked very well. You don't need to travel to the hospital, you don't need to wait in long queues, and so on. And so the penetration that we've seen from telemedicine has increased quite dramatically. And all these things are very, very important, and I think underpinning our bullish call based on innovation and increased technology.
Great. And recently there was the big news about the FDA's approval of the Biogen's Alzheimer's drug. I was just wondering how you think this might affect the valuations of the biotech sector.
Now, the approval of this drug is really fascinating. Firstly, because the data were very mixed. You had some positive data and yet some negative data. And so its approval was not a clear-cut one. There's still plenty of controversy there. But what has now taken center stage is really on the pricing side. So while many companies will look at that approval as a lower bar by the FDA, and they try and push their products that probably are not as efficacious, but maybe are addressing high unmet medical needs. What we are seeing more interesting is on the pricing side of things. And what I mean by that is Aduhelm has been priced at $56,000 per year. per patient by Biogen. And we've already seen some organizations doing some cost benefit analysis and healthcare insurance pushing back on that particular price. One potential benefit that may come from this whole saga is newer pricing models for medicines will be tested. These are outcomes-based medicine pricing models, where you say, we will pay you X amount if we get the results that you promised us or that was shown in the clinical trial. If it doesn't translate to the real world, then we don't pay anything. So that's a potential positive that may come from this. But if we're going to make one prediction, it would be that this Alzheimer's drug, Aduhelm, is going to be the subject of many PhDs in the near future.
Great. And following on from that, how do you see M&A in the healthcare sector evolving after such good performance this year?
Yeah, we are again very bullish on M&A on account of strong innovation, modest valuations in the sector, and very strong balance sheets. Take an example, AstraZeneca, which beginning of 2020 did not have a vaccines business, rapidly built one based on COVID-19 vaccine from scratch. And this ability to be able to pivot into new disease areas gave you the confidence to acquire a company called Alexion. They actually got a green light in the last week or so. And Alexion is a specialist in the immune disease area, which is going to be a relatively new area for AstraZeneca. And this is where the innovation is. And what we are seeing is companies, particularly the big pharma companies, are going to be led through M&A into new disease areas to be able to be nimble and agile in this fast-changing world. So innovation continues to be the underlying thing driving everything. And then M&A is going to play an important role in making sure that that is maximized.
Perfect, thank you. And recently there's been a lot of talk about inflation rates rising. And I was wondering, is this a concern for you? And how might you look to tweak your portfolio if the rates do start to rise?
Well, that's a very good question. Inflation is on everyone's lips. At Investec Wealth Investment, we incorporate factors such as inflation, macroeconomic factors, even things such as, rare side effects that nobody saw coming, or the change in political landscape or the regulatory landscape. We incorporate all that through a discounted cash flow analysis. And what we tend to do is, do a scenario analysis where we put all these factors in there and we stress test them. So the DCF that we use is not to inform valuation, rather is to try and tease out, where are the opportunities and where the landmines might lie. Having said that, though, many companies, many of our peers will use DCFs, but what differentiates Investec Wealth Investment is three things. The first one is diversity, equity, and inclusion. And what this means is sitting around the table is a caliber of highly qualified analysts and investment managers with industry experience who are interrogating all these different factors, be they inflation or pricing, from multiple different perspectives. The second thing that differentiates Investec Wealth Investment is we've got a strong drive to speak up. So none of the assumptions that we make are safe. Everything can be challenged. And then the final factor that differentiates us is we've got a long-term investment horizon. Now, trying to call short-term changes, in prices, can be a treacherous game to play. How many people saw COVID-19 coming, even in February 2020? But what we try and do is, if one stretches out the investment horizon, then you can better capture some of these low probability but high impact events. And in Investec Wealth Investment, we bring all those three factors together: diversity of thought, as well as the ability and encouragement to speak up in the long-term horizon. We bring all those things together, and it means that factors such as inflation or pricing can be captured in our investment analysis and decision-making process.
Great. And just to finish off, it'd be great if we could know what sort of characteristics you look at when investing in healthcare companies.
No, that's a very good and important question. At Investec Wealth Investment, we are looking for companies that generate a positive economic return, and that typically is linked to growth. So there has to be a growth element to that, and also it has to be on a sustainable footing. And that allows these companies, therefore, to compound value for shareholders and for us, for our clients, over a long period of time. Now, what does quality mean? At Investec Wealth Investment, quality means that we're using a cash flow-based return on invested capital metric, which has to be above the cost of capital. This has to be on a sustainable basis, so the companies are generating cash, and that cash is being deployed at very high rates of return. So the incremental rate of return is very high. And then, allied to that has to be a very successful capital allocation track record. So, we interrogate the capital allocation track record. What are the structures behind it? What's the culture behind it? What are the people behind it? How did they allocate capital during a crisis such as COVID-19, for example? And therefore, once you bring all these things together, we can say that these companies are investing in a sustainable way, thereby taking into account what is called the triple bottom line of people, planet, and profits. And this is in keeping really with our remit, which is to be stewards of capital for our clients over a long period of time. We need to have businesses that can compound capital at high rates of return in a sustainable fashion.
Great, thank you so much. That was really interesting.